Hey guys, welcome back to the channel. Brad here. So today we're going to talk about how to value a stock, specifically Tesla. Okay? Now, Tesla is a fascinating company. It's really in startup growth mode. And in order to value Tesla, we really have to have a story about what Tesla is going to do over the next 10, 20 years. And because we don't have a lot of tangible numbers to go off of, Tesla is still fairly early in the game. So much of our valuation of Tesla is going to be based on what our story is for the company. Is it a car company? Is it a technology company? Is it an energy company through the battery storage? What is Tesla, right? And so there's this professor at NYU. I've mentioned him in past videos. His name is Aswath Damodaran. I took a business valuation course with him online a few years ago. And it was like drinking from a fire hose, guys. There is so much that goes into business valuation, okay? Now, he put out an incredible video a couple months ago, and it's called Do It Yourself Tesla Valuation. And so what he does is there's a number of different scenarios depending on what your story about Tesla is. And so, in different aspects of valuing Tesla, you can decide for yourself, what you think is going to happen with that company. And you kind of piece together your own valuation. And I'm going to link to that video in the description of this video. But I just want to say a few more things to set that up for you. Damodaran has been teaching business valuation for 34 years. And his most recent book is about valuation as it relates to both numbers and as it relates to story. Now, when you get into these really entrenched companies that have been around for a long time, they're kind of, they're established, right? Now, it's easy to look back at the financials and get some sense of what their value is based on what they've done in the past, because, they've been operating for so long. They're well entrenched. Maybe they have a moat in terms of, it's hard for competitors to come in and steal market share away from them. So these companies tend to be much easier to value because we can look backwards to value them largely. Now, with a company like Tesla, a company like Uber, a lot of these companies in startup mode, so much of the financials are yet to come, right? And so there's a lot of guessing. There's a lot of, having to kind of decide what their trajectory is going to be based on, your best guess from what's happening today. And the important thing there is when you're valuing a company like Tesla, like it can be really compelling to, think that Tesla, it's going to be a straight up technology company. It's a massive disruptor. It's going to go out into all of these different industries like self-driving trucks, battery technology. The sky's the limit for Tesla in the bull case, right? And the key here with valuing a company like that is to really do your best in terms of assigning probabilities to different outcomes for Tesla. The probability that it could go bankrupt is one of those possibilities. So kind of weighting the different possible futures of Tesla and what the current share price is based on those different futures to really get a sense of, okay, what should I be paying for Tesla today? Based on those assortment of possible outcomes. Because the worst thing we can do as investors is to overpay for an investment. Because if we overpay, we're not going to be trading, exchanging a dollar today for $2, $3, $4 in the future. We're going to be trading $4 today for maybe a buck or two in the future. And that's really not prudent investing. That's not intelligent investing. So we want to do the best we can of assessing the possible outcomes, the probable outcomes of Tesla, and coming up with a rational value for Tesla today. And it may not just be a value, a point in time like $427. It's probably going to be a range of possible values, right? And we really want to get in when the price is significantly below that range of values. That's really prudent investing. So that's all I'll say. Go check out this video from Aswath Damodaran on DIY valuation for Tesla. It's fantastic. I think it's about 18 minutes long. And come back here. Let me know what you guys think of that. If you have any questions from that. I love Tesla. I've got the t-shirt on. It's a lot cheaper than the car, so I figured I'd go for the t-shirt first. But yeah, it's a fabulous video. Damodaran also has a lot of other wonderful valuation videos on his YouTube channel. Google, Netflix, Facebook, Apple. He's done Uber within the last 6 months, I think. So just a wealth of knowledge if you want to learn how to value stocks. Okay, so that's it, guys. That's all I'll share. Enjoy that video. Let me know what you think of it in the comments. All right, take care. Bye.